Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, we had a surprising green day today, at least surprising me, and in my opinion, this is the scenario where the oil bounce finally getting going, which we will look at, added some extra fuel for the S&P 500 to hold on strong and see another day bouncing. So reference to volume. Certainly if you're looking at this chart, you're saying, oh, but it's declining bull volume, and that's very notable. For me, individual names, volume absolutely matters. For the market as a whole, I have learned over the last 3 years that the bulls do not need increasing volume to see increasing price. And we've watched, let's look at it again. Weekly time frame on SPY over the last few years. Look at the volume. Look how high it is back in 2015, 2016. And then this orange line here is the 20-week average volume. And the entire significant bull run of multiple years to all-time highs, the volume did nothing but go down. All that matters is price history. So the price going up with volume going down definitely burned itself into my memory. And from that point on, I said, okay, volume doesn't matter for the bulls of this market. I think we all know at this game, hopefully, that it's not a fair game. And big money and deep pockets and the Fed and everybody wants the market to go up. And they are certainly doing so by cutting rates and things like that. So it's the scenario where volume is just not needed for the bulls and it is needed for the bears. And life's not fair. And it's not fair for the bears in the market. So next resistance level for SPY, I'm looking up at 286.93 and 289.21. The halfway point between all-time highs and the low of the pullback just 3 days ago, we are currently closer to all-time highs than we are to the low of 3 days ago. We crossed the midway point. We have retraced more than 50% of the bounce in 3 days. If there's anything that we're getting accustomed to in this market, it is V-shaped recoveries, and this is certainly a V-shaped recovery at this point. The question is, can we follow through? Can we change the daily trend with a higher low and a higher high? That shows that it's not just a quick move up with shorts being squeezed and a lot of short covering. If we get that follow through, we're looking back up at the all-time high. So we need the higher low and higher high move. And we had a little bit of a blow off top here at the end of the day. And a blow-off top is pretty much the opposite of a oversold dump climax. It's where we see a last surge up by the bulls, where we see a lot of resistance taken out and just overextended moves on a lot of short time frames, and then a quick 180 turnaround. And that happened all within the last half hour of trading. So we have to see tomorrow if the bears can get any kind of follow-through from that. But at this point, it's going to be all about the hourly uptrend for me personally. The low of the day was an hourly higher low, and I don't have the moving average up right now, but if you look at the 20-hour moving average support with extended hours on for SPY, every higher low that we've formed, including the low of today, was bouncing off that 20-hour support. So losing that 20-hour support will be notable. Losing the hourly uptrend would be notable. Then we zoom out to the daily and just look for a higher low to form. IWM, not getting follow through today, but bulls are buying the dip. So this is already starting the consolidation. The bounce was just giving us a lower high, and now we have to see the higher low and continuation. So the key resistance is 150.89 that the bulls are going to have to break. The key support down here that the bulls must hold is 145.32. So it's the higher low and the higher high that confirms the daily trend change. And in the next couple days, we'll get some really good insight whether IWM bulls can pull that off or not. QQQ bulls giving themselves more space to work with, certainly not as strong of a bounce as the S&P 500, and that's because other sectors like the healthcare sector and the financial sector have been helping the S&P 500 with strength, whereas the tech sector has been lagging behind a bit due to all that Fed probe news with Google and Amazon and Facebook. But we're looking right now at the next resistance level of 179.85. And again, same thing, lose the hourly uptrend, we zoom out to the daily, and we see can the bulls form a daily higher low and higher high to confirm the trend change. XLF, that's a all-star on this bounce the last 4 days. We broke the key double top of resistance. This is the highest price, or today, we hit the highest price that the financial sector has seen in almost a month, a little bit less than that, about 3 weeks. And it's also the price that was hit in XLF, certainly one of the higher prices that we've seen on this bounce. We definitely are not back up to the high, but a very significant recovery. The weekly time frame still in an uptrend. Anything above 25.08 is a higher low. We can certainly be confident that 25.92 is now that higher low. The question is, can the bulls break 28.14 in the next week or two, or do we have to form a weekly equilibrium and see this range tighten up into July? XBI notably weak today. So for the bulls to change the trend on XBI, just like IWM, we've already started the consolidation. So we must hold 79.31 and then we must break 83.18 to change that daily trend and get some follow through. Looking at it on the weekly chart, it's just a contained pullback at this point. Lower highs and lower lows. Remember, we're watching the week or the monthly equilibrium like a lot of other individual names, and bulls are doing everything they can to form our monthly higher lows in these tightening ranges, but we certainly need a lot more follow through. We need a daily trend change as step number one, and then of course we would need a weekly trend change to be really confident that that monthly higher low has been set. So just looking at things right now, it stands out that the biotech sector is slightly weaker, IWM is slightly weaker, and QQQ slightly weaker. XLF and XLV very strong, and SPY certainly showing strength as well. So here's XLV. We broke our resistance of 90.18, but there was profit taking at the end of the day. And again, this is the kind of scenario where I certainly would not be entering a bull break of this resistance because the bulls are overextended. If I had my ideal world, we would have rejected and formed a higher low first. But because we broke that resistance, we're certainly going to be anticipating a higher low will form compared to 86.77. And to get follow through, we want to break 90.85, which is the highest price that we've seen since the dump back in mid-April. So best case scenario, if this is our temporary top, and again, the hourly uptrend is our guide, if we break the low of 89.54 from this morning, then we'll say our temporary top has been set, and the bulls will have to form a daily higher low and then see continuation over 90.43 and 90.85 to see this breakout. Also watching the daily exponential 12 and 26 period, we had the bear cross. So we had the bull cross with significant follow through. We had the bear cross with significant follow through. And now the bulls are attempting a bull cross again. And we'll see if we can get some follow through. So the VIX pulling back, trying to find a support level above 1440. Again, that's the most likely scenario, in my opinion, to stay in this weekly tightening range. And the bulls need a green day tomorrow and a consolidation day in the market to see that higher low form, and then we'll look for a bounce and for a lower high to form compared to 1980, and then we'll look for this to tighten up through next week, and we'll probably get a break of this tightening pattern mid to late next week. We'll take it one day at a time as always. Bulls definitely need a green day to be convinced our higher low has been set compared to 1440, and the bulls would be confident if 1650 could break tomorrow. Oil with its bounce finally underway, but that being said, we're still seeing a lower high every day the last 5 days. But what was notable for me is this 4-hour time frame. Clear 4-hour downtrend, clear 4-hour exponential resistance. This is the 12 period. It rejected the last 3 bounce attempts, last 4. Then we formed our higher low and higher high. And as soon as the bulls broke to confirm the 4-hour trend change of 52.23, it was just off to the races. Look at this 15-minute time frame. Once that break occurred, bulls did not slow down. 5-minute time frame, big time bull move. So I've definitely been watching for the oil bounce over the past few days, but unfortunately today I was away. I made a quick trade this morning on Tesla, and it gave me a week maker, so I was done. And unfortunately, when that's the case, sometimes it doesn't benefit you in the sense that oil was definitely something I was scouting to get into, but I find generally that if I make a solid amount on the day, if I just stop trading and end it there and start the next day with a fresh clean slate, my account does better. So I'll be watching oil. We know oil that if we do get follow through on this bounce, we're just looking for a daily lower high compared to 59.67. But again, talked about the video yesterday, how the way the setup was for oil and the market, the way the relationship was going between the two over the last 3-4 days, it really favored the market bulls in the sense that once we do get this oversold bounce, it's only going to add fuel to the S&P 500 move, which is, again, in my opinion, what happened today. And we'll be watching for the oil bulls to maintain the 4-hour uptrend. 51.17 is the most important support. We've had a bear cross of these exponential moving averages ever since the low 60s, and we'll see if the bulls can pull off their first bull cross, indicating daily oversold bounce is underway. Natural gas still extremely weak. Daily RSI oversold. Weekly RSI still getting there. Again, lack of support means the RSI levels can get very extreme. Look at the exponential resistance here, the 12 period. 1, 2, 3, 4, 5, 6, 7 rejections. Watch for the same thing as oil, but again, I personally would not be trying to fight this trend with a lack of support, and the bear's clearly in control. But when the bounce gets going, the daily oversold bounce, it will be marked by getting over this daily 12 period exponential resistance after so many rejections. So again, this is the kind of thing where I'm looking at these exponential moving averages, and on some individual stocks, they're not respected at all. And there's a lot of back and forth above and below them, so I know to disregard it. But when you give me this clear of an example with this clear rejection time and time again, that tells me that's what I want to be focusing on as far as time frame goes, because it's a great visual guide of when things are different. Again, on every little bounce attempt, I want to know when is it different, because these little lower highs and lower lows certainly aren't giving the bulls much opportunity. But if we were to get over this exponential resistance, the next bounce, we can say it's different this time around. So I appreciate you watching. Do some good things out there in your local communities. We're going to check back in tomorrow, actually probably not tomorrow, but over the weekend, to see how things wrap up. Let's see if SPY finally gets some consolidation tomorrow. I would be shocked to have a green day tomorrow, but I was a bit shocked today that the bulls pulled off a green day as well. So, one day at a time. Thanks again. We'll see you soon. Bitcoin's breaking out.